Let's go over how crypto sales move through the tax software and onto your tax return. First, you need to enter 1099-DA into tax software. If you are not sure where to enter it, try searching inside your software for 1099-DA, crypto, or digital assets. If you cannot find it, search for Form 8949 or Schedule D. That is where crypto sales and stock or mutual fund sales are reported. All detailed capital asset transactions are listed on Form 8949. The totals then flow to Schedule D. If your software does not list 1099-DA specifically, you will enter the information the same way you would enter stock sales. Here I see Schedule D and Form 8949 listed. I will select the section for stock, mutual funds, and cryptocurrency sales. It may also reference Form 1099-B or broker statements. First, there's a simplified way of entering information for summary transactions where cost bases were reported to the IRS and there were no adjustments. You would simply enter these transactions as totals in your tax software. Otherwise, you need to enter detailed information. I will enter short-term and long-term stock sales from a 1099-B. Entering crypto sale is almost the same. If you compare a Fidelity 1099-B for stock sales and Coinbase 1099-DA for crypto sales, the layout and information are very similar. Using a mock-up Fidelity statement, I will enter the stock name, date acquired, date sold, and sales price. Then I will select whether cost basis was reported to the IRS. After that, I will enter the cost basis and any adjustments such as disallowed wash sale. I will do the same for my long-term stock sales. If there were multiple purchase dates, you may need to enter various for the acquisition date. For 1099-DA crypto sales, just like stock sales, short-term and long-term transactions must be entered separately. First, I will enter the short-term crypto transaction. I will enter BTC for Bitcoin and add a short term for easy reference. Next, I will enter the acquisition date from box 1D. Then I will add the sales date from box 1E of the 1099-DA. The sales price comes from box 1F, which shows the proceeds. You also need to report whether the cost basis was reported to the IRS or not, based on your 1099-DA. Be careful to select the correct form type in your tax software. Make sure to choose 1099-DA for crypto sales and not 1099-B, unless that is the form you received. One of the most important parts is entering the correct cost basis. This will affect how much of your capital gain is taxed. In this example, Luca's cost basis was $1,000, which is listed in box 1G of the 1099-DA. If the cost basis is shown as 0 because the broker did not have that information, it is your responsibility to enter the correct cost basis. If the form shows an incorrect amount, for example 500 instead of the correct 1000, you should contact the broker first to correct it before entering a different number on your tax return. If you report a number that does not match what the IRS received, you may receive a mismatch notice from the IRS later. For regular cryptocurrency transactions, wash sale rules generally do not apply unless you are dealing with tokenized securities. Now I will enter the second batch for long-term crypto sale. I will label it as long-term if there is space. In this example, I do not have a specific acquisition date because there were multiple purchases. So I will select the alternative option and choose long term. Next, you will need to provide the sell date and proceeds from box 1F and indicate that the cost basis on 1099-DA was not reported to the IRS. After entering everything, your tax software may show a summary of all transactions. In this example, I see 4 total transactions entered, 2 from 1099-B for stock sales and 2 from 1099-DA for crypto sales. For each transaction, I see the asset name, acquisition date, sell date, type of transaction, proceeds, and cost basis. At the top, you may also see the total capital gain or loss. Next, I will show you how these transactions appear on Form 8949 and Schedule D. Now let's look at how crypto sales appear on your 1040 tax return. The 1099-DA digital asset sales and the 1099-B stock sales that we entered into the tax software will show up on Form 8949, Sales and Other Dispositions of Capital Assets. Form 8949 is divided into 2 main parts. Part 1 is for short-term transactions, which are assets held 1 year or less. Part 2 is for long-term transactions, which are assets held more than 1 year. The reason for the separations is tax rates. Short-term gains are taxed at ordinary income tax rates, which range from 10% to 37%. Long-term capital gains are taxed at lower rates, generally 0%, 15%, or 20%, with certain assets taxed at 28%. In addition, the income ranges for long-term capital gains brackets are much wider. Under each part of 8949, you must check a letter box that describes the type of transaction. For Part 1, short-term transactions, the boxes include A, B, C, G, H, and I. These represent short-term transactions reported on Form 1099-B, Form 1099-DA, or transactions not reported on either form but similar in nature. The categories also indicate whether cost bases were reported to the IRS or not. For example, Box H represents short-term transactions reported on Form 1099-DA where cost basis was not reported to the IRS. You can only check 1 box per page. If more than 1 box applies, you must complete a separate Form 8949 page for each category. And obviously, the tax software will generate these pages for you. Part 2 works the same way for long-term transactions. The boxes include D, E, F, J, K, and L. These represent long-term transactions reported on Forms 1099-B, Form 1099-DA, or similar transactions not reported on either form. Again, the transactions are divided based on whether cost bases were reported to the IRS or not. For example, Box K represents long-term transactions reported on Form 1099-DA where cost basis was not reported to the IRS. Just like in Part 1, you can only check 1 box per page. If multiple categories apply, the tax software will generate separate pages. Now, going back to the 4 transactions we entered into the tax software, they will generate 4 separate pages of Form 8949, 2 for short-term transactions and 2 for long-term transactions. The first page is Part 1 with box A checked. This includes short-term stock sales from Form 1099-B, where cost basis was reported to the IRS from our fidelity statement. The second page is also Part 1 but with box A checked. This includes short-term crypto sales from our Coinbase 1099-DA statement, where cost bases were not reported to the IRS. The third page is Part 2 with box D checked. This includes long-term stock sales from Fidelity Form 1099-B, where cost bases were reported to the IRS. Finally, the fourth and final page is Part 2 with box K checked. This includes long-term crypto sales from our Coinbase Form 1099-DA, where cost bases were not reported to the IRS. All 4 pages of Form 8949 flow into Schedule D, Capital Gains and Losses, which is part of Form 1040. Schedule D is 2 pages long and is divided into 3 parts. Part 1 reports short-term capital gains and losses for assets held 1 year or less. Part 2 reports long-term capital gains and losses for assets held more than 1 year. Under each part, certain lines summarize transactions reported on Form 1099-B and 1099-DA. Line 1A in Part 1 and line 8A in Part 2 summarize transactions where cost bases were reported to the IRS and there were no adjustments. You would simply enter these transactions as totals in your tax software. Line 1B lists totals of short-term sales from Forms 1099-B or 1099-DA where cost basis was reported to the IRS. These correspond to Box A or Box G on Form 8949. Line 2 lists short-term sales where cost basis was not reported to the IRS. These correspond to Box B or Box H on Form 8949. Line 3 lists short-term transactions that were not reported on either 1099-B or 1099-DA, but are similar in nature. For each transaction, Schedule D shows proceeds in column D, cost basis in column E, and any adjustments such as wash sale disallowances. The gains or loss is shown in column H. In our example, the short-term stock sales resulted in $942 loss, and the short-term crypto sale resulted in $308 gain. These amounts are combined on line 7, resulting in a total short-term capital loss of $634. Part 2 works the same way for long-term transactions. In our example, line 8B shows long-term stock gains of $3,044 and line 9 shows long-term crypto gains of $1,749. These amounts are combined on line 15 for a total long-term capital gain of $4,793. On the second page in Part 3 of Schedule D, line 16 combines the net short-term amount from line 7 and the long-term amount from line 15. In our example, this results in a total net capital gain of $4,159. If line 16 shows a capital loss instead of a gain, there is a limit on how much you can deduct against ordinary income. For all filing statuses except merit filing separately, you can deduct up to $3,000 of capital losses per return against ordinary income. Any remaining loss is carried forward to future years and would be calculated in your tax software on the capital loss carryover worksheet. For example, if line 16 shows a net loss of $4,841, you could deduct $3,000 on your 1040 against other income. The remaining $1,841 would carry forward to be used in future years. Now let's go back to our example. The total from Schedule D flows to Form 1040 on line 7, capital gain or loss. In our example for Luca, that amount is $4,159. It is then added to his wages of $30,000, giving him an adjusted gross income of $34,159. On page 2 of 1040, we subtract the standard deduction of $15,750 for a single filer, which would bring Luca's taxable income to $18,409. The tax software calculated tax on that amount of $1,475. Since Luca already had $2,000 withheld from his W-2 job, he would receive a refund of $525. Continue with the full crypto tax playlist here. Thanks so much for watching.